All right, we are live here on this beautiful Saturday, December 2015, our final Toast to Traders of the year. Just want to tell everybody I'm so thankful and blessed to be part of the Trade Thirsty team. Hubert Senders and I started this company with the intent of bringing great speakers in once a month, and today we have stacked the deck with the list that you see on the board. We've already had Rob Hoffman go, Price Headley just finished, and next up is my good friend, Mr. Todd Gordon. You may have seen him on CNBC. And I hear him joke that you may have seen him at Starbucks too, because he's just a regular dude who does a great thing in the markets with his trade setups. Today, you'll actually be seeing a presentation that he is giving for the very first time. Let me go back. There we go. How I made the best trade of my life with this simple setup is going to be Todd's presentation. Let me see if I can pass the ball to him. And we'll do a quick audio test. One more reminder, don't log out, because if you log out, you might not be able to get back in. We are pretty much right on the top of maxing out for the day. All right, Todd, I pass the ball to you. Give us an audio check.
All right.
I hear you. All right.
All right.
All right. How you doing this morning, buddy?
I'm good. How you doing, sis?
I'm doing good. Are those babies up and running around yet?
They had us up. They had us up nice and early this morning. We had a 4 a.m. wake up call this morning. So
that sounds amazing.
Oh yeah. So yeah, we're gonna have some fun. Nice job here as always. Great lineup. I'm excited to be part of it.
Okay, well, I'm going to mute and let you take this baby home.
I'm going to crack
You have 1 hour. It's 10 after the hour. We're running a little bit behind, but I'm going to let you you go the full hour, so you can wrap up around 10 after 11.
All right, awesome. Now, Jeanette, curious, can you hear that sound coming through on the video that I'm showing?
I cannot.
Okay, that's fine.
Okay.
That's good. All right, having some fun. So, guys, welcome. Thanks for joining us. And as Jeanette said, don't log out because I don't think you're going to get back in. Packed room, and really enjoyed listening to Rob and Price, great crew, and then with some really good guys right after. So we're gonna have some fun. End of the year. It's been a volatile year. Hopefully you guys have done well, and I'm gonna talk about a trade that we just put on, and it was kind of a big one. So this is not going to be something saying, hey, this is what we did. Look how much money we made. No. What I'm going to try to do is show you how to replicate this setup and catch the next one. If you guys remember this cheesy movie with Frankie Avalon in the 80s, Back to the Beach, we're going to show you how to catch the next humunga, cowabunga from down under. So we'll have some fun with this, guys. So, Jack, can you make me an org? I believe I am, so I can see questions. All right, perfect.
Yeah, I made you an org.
All right, good morning, everyone. All right, so we really need to do this because I am going to be talking live trades here. So, guys, this is risky. We have a lot of volatility here. If you've been only trading here for a couple years, you're just starting to see what volatility is. So this is a risky game. We're going to be talking about live trades. This is no guarantee of future profits. It is risky. You're probably going to get beat up a couple times before you get the hang of this game, so don't trade with money you can't afford to lose right here. It's a bad idea just from obvious point of view, but something you probably don't think about is, if you're trading with capital that you haven't accounted for and this is risk capital and you're comfortable putting it at risk, you're not going to trade well. If you're trading as nervous money, you're going to be deviating from your trade plan. You're going to cut trades short. You're going to hold on to losers. Just bad news, okay? So this is risky. We're going to be talking about live trades. So that's that. So I'm the kind of guy, Jeanette and Hubert have brought on, real traders. We are in the trenches. Nobody here is going to tell you that trading is easy. Trading is like a boxing match, okay? Or it's like trying to surf a huge 100-foot wave, okay? You're going to get beat up a few times, but you're going to catch some nice rides as well. That's the reality of trading, okay? So the big kahuna trade is what we're going to be talking about here. So I'm going to obviously attach some good education in here. I'm going to show you the setup. I'm going to show you how to duplicate this. And I have a couple trades that I want you guys to watch here going into 2016 that are set up. And we're going to show you how to do some, a little bit more conservative option entries, how to hit some singles, how to hit some doubles. But occasionally we want to put us in the position of doing this. So this is a trade that we had on. And this is a technical setup that I'm going to teach you here in the next hour. So we basically had long call options in GMCR from our technical setup. We had the options at 85 cents. And you guys know what happened to GMCR. We wound up selling those options at just under $32. So that was like a 3,800% return. And clients had the trade on. I obviously had the trade on. People were very happy in the daily video that I posted. Everyone was like, fantastic day, not bad at all. Congratulations on a big trade. So that's the deal. Okay, that's the trade we're going to be talking about. But I'm going to show you how to do this. We're going to bust a couple myths up front. Okay, one of the myths that you're going to see is that, you know, maybe there is a place for counter trend trading in your arsenal. And when you're first kind of starting out, everyone just says trend trade. And I think to a large extent that's true, but there are certain times, guys, that you should be counter trend trading. And there's only certain strategies and methodologies I know that can help you counter trend trade. So that's going to be part of what we're talking about today. So you're not going to be perhaps used to hearing this kind of talk. So we're going to be talking about two kinds of surfing here today, how to catch the big ones, and then how to do the little bathtub waves that my wife and I were doing on our honeymoon in Waikiki. Okay. No, windmill. That is not my everyday trade. No, that was a nice finish to a really good year. Anyways, but that was cherry on top at the end of the year. Okay. So a little bit about me, if you guys don't know me, Todd Gordon, and I am the founder of TradingAnalysis.com. I've started working with Jeanette and Hubert just about a year ago, and I'll just tell you guys, I put it right out there. Love working with these guys. They are great businessmen and women, and my business in a year has doubled. So you know, life's good, trading's good. I have my hands full, as you can see here, with the twin boys. I am originally from upstate New York. I was I'm a corporate dropout flunky. I traded for a hedge fund and was a senior technical analyst for a brokerage firm on Wall Street. So living in Hoboken, New Jersey, I met my wife at the supermarket one night, and then we got married, and yep, this guy was there. So I kind of met him through CNBC and TV and stuff like that. So he was a gentleman, love him, hate him. I think the TV persona, it's just a big show. He really is a good guy. So I'm sure I probably just lost half the audience right there, and that's fine, but whatever. Okay. So again, I work at home. I live at home. I'm a stay-at-home dad. I'm a corporate dropout. I've traded my whole life. Day one out of college, I was a proprietary trader. That was 21. I started trading when I was like 19. I am now 36. I work down in my basement office. I go upstairs and annoy my wife, Trish, and play with the kids in between trades and stuff like that. So I really enjoy running the business. I like doing these webinars because it kind of gets lonely as a trader, you know, by yourself. So I like doing these and kind of interacting with people, having fun. So thanks for joining us. We'll have a good time. As Jeanette mentioned, I've done CNBC a bunch of times. I've done almost every show they have. So I'm kind of their go-to technical analyst. Me and about two other guys are their main technical analysts. So you may have seen me there. So that's me. I've been in the trenches with you guys the whole time. Okay, I know trading. I've been through every learning curve that you are currently going through or have been through. I know what you're doing. I know what you're going through. So you're going to see that my style of analysis is a little different than what you saw from Rob and what you saw from Price and what you're going to see from the guys after me. I like to look at markets in more of a linear fashion, meaning I like to set up trades and plan them ahead of time. Okay, I like to identify areas on the chart where I think the market is likely to turn, and then I like to trade at that level. So it's more like fixed levels. Okay, I like to use a lot of different tools that say, okay, the market should probably stop right around this level. And if it does and it responds perfect, we're going to put the trade on. If it just goes right through, okay, that's fine too. We're not going to place a trade, or we're going to be stopped out for a very small amount. Okay, so this is the setup in Green Mountain. I'm going to kind of build the trade for you and show you, you know, what we did. So in this webinar here, guys, I'm going to talk a little bit about Elliott Wave, and it's one of the most misunderstood, one of probably the most controversial styles of trading analysis and technical analysis out there. I've been doing it for over 10 years. I couldn't stop doing it if I tried. It's literally changed the way I look at markets. It's not for everybody, but those of you who become fascinated and interested in it and start to educate yourself, it'll change the way you look at markets. So GMCR went down in a very nice 5-wave move, and I'm going to break apart the 5-wave move here. I'm going to show you how to identify these for yourself. Now, a lot of people say, well, Elliot is way too subjective. You know, how do you know where to start and stop the count? I totally get you. I understand, and I have a solution for you. Okay? Alan says Elliot Wave is great. Awesome. Steve, that's pretty funny. Talking about Donald. I'm not even going to get down that rabbit hole. So ahead of the buyout, Green Mountain held my anticipated fib support zone that was calculated ahead of time. So I said, okay, you know, this is starting to get interesting. Then what happened is, if you guys remember, right before the big move in GMCR, earnings came out, and they were horrible. The stock went from $40 into our Fibonacci support zone, which I'm going to teach you how to do. It rallied up like $8. Okay? So the whole move was an $11.92 move from the absolute high of the gap from where it started. So when a stock gaps up on good earnings, on bad earnings, from your technical support, you're like, okay, that's going to be pretty interesting. Plus, there was rumors out there that GMCR was going to be bought out. It was all over the internet. So I was like, okay, you start to put these two things together in that it holds your technical support, it gaps up on poor earnings, and the stock is acting strong. All we did was we set up a trade that would look to move up to the measured move target. Okay, so all we're looking at is the initial swing up was just under 12 bucks. We set back, and then we put the trade to work, and what we did was, this is called the Big Kahuna trade, okay? It's a highly counter-trend trade. It is fading the well-established trend, and we were wanting to make money just to get up to the measured move target, okay? If you guys have ever heard of like a two-step pattern or measured move or an AB equals CD, I mean, it's one of the most basic patterns out there. So if this was $11.92, you're going to look for an $11.92 move. So here's how we structured the trade. First thing we did, and we're going to get a little heavy on options here, so I hope you guys like options. We sold the 52 half calls for $2.27. All right, so being bearish calls or being short calls is a bearish position. If you bought calls, that's a bullish position. If you sold calls, that's a bearish position. And that's a very bearish position because you have unlimited risk. Then what we did was we bought the higher 55 calls. Okay, so this now turns into also a bearish position, but with limited risk. When you sell a call but then buy a higher call, you are bearish the market, and you have collected a credit of 88 cents. You sold them at 227, bought at 139. The amount of money left in your account is 88 cents, or $88 per contract. Okay, so that's a bearish trade. Then what we did to put the Big Kahuna to work is we took that 88 cents and we used it on the purchase of a higher call. So we took the 88 cents and we bought the 57 half call for 85 cents. So all together, guys, by selling the 52s, buying the 55s, buying the 57s, we're left with 3 cents or $3 per contract in our account. Okay, and the whole idea here is, if I'm wrong, okay, GMCR, let me go back a couple slides. GMCR is getting crushed, right? I mean, this thing is in a downtrend that went from 160 to 40. If you try to counter trend trade like this and just buy the stock and say that's it, it's going higher, I think you're going to have a really hard time. So what's great about this trade is it leaves you an out. If you're wrong, if I'm wrong and the stock just continued down into the 30s, we would have kept the 3 cents. We would have made money if we were wrong. So the trade went out, and this is how it was. This is the trade actually sent out to customers, and it went out on our SMS alert. Long GMCR right here, 52 half call, buy the 55s, buy the 57. It was a net credit of 3 to 5 cents. Basically, this was going to make money if we could get up into that 59 target, or it drops away. Okay, if it just went sideways, that's when you get hurt on the big kahuna trade. Okay, if it just goes up to like 56, 57, and it just goes sideways, that's when you get hurt. These kind of volatile setups, and I've got 3 I want to share with you today, right now. They're highly volatile stocks. I don't think, you know, they're going to just go sideways. They're either going to keep going in their direction or they're going to do a sharp reversal. Okay, so the trade went out, and this was the P&L graph. Those of you who use Thinkorswim right here, you get hurt. The green line is just expiration. You get hurt if it's down at 56 and 57, and above like 59 and change, you make money. Up here, it's unlimited, and if it drops back into the 50s and 30s and stuff like that, you make a small amount of money. Okay, so you make profits below 53. Here's where you get hurt in the big kahuna trade. But again, you're putting these on in volatile trades, volatile markets where you don't expect it to just go sideways. Okay, so that was the setup. So the stock gets bought out, and it goes to $90 from like 50, right? So being that we had that uncovered call, we bought the 57.5 call, that was all profit. So we bought it 85 cents and sold it just south of $32, and that was like 3,600%. Okay, so what I'm telling you here, guys, is you can catch these all day long. You can catch the big kahuna trade. I'll guarantee you one on Monday. No, I'm just kidding. And I hope you're saying to yourself right now, Todd, are you crazy? And being that we're going with the surfing theme here today, of course we had to bring Jeff Spicoli in, right? I mean, how do you leave Spicoli out of a surfing-themed webinar? So, no, I am not waterlogged. I'm not crazy or drinking too much eggnog around the holiday seasons. There are 3 markets that I'm watching right now that are potentially set up in the big kahuna trades. Okay, GoPro, Chipotle, and gold. Okay, so we're going to be looking to actively trade those, and we'll get after it here in the webinar. Okay, but first, you know, before we go out there and surf, we need to go to surf school. Okay, we got to get inside the waves, and we got to figure out how to set these things up. Okay, yes, I do sometimes bring my computer and trade from the beach in between surfing. It's very, very relaxing. Usually it's during the day, not right there. Okay. I'm just reading some of those questions. I'll go back, Mushroom. I'm going to go back, and I'll go back over the wave count once I've introduced Elliott Wave to people. I don't want to get off track on there because I'll confuse some people. And at what price level did you enter the position? We got in, let me just slide back, go past the cool surfing slide. Oh, I'm getting a little too far. So we put the trade on at like $53, $54. It was right on this red one high, $53, $54. Okay, so let's back on track now. So we're going to surf school. So let's talk about the 5-wave pattern. And I know some of you are probably rolling your eyes saying, oh boy, Elliot, you know, it's too confusing, it's too objective. You put 10 different guys in the same room and you get 10 different wave counts. I'm telling you right now, that's BS. I know 10 good Elliott Wave analysts out there. I know more than that, but if I show you 10 guys who've studied it and apply it correctly, all our accounts are about the same. I'm telling you that. So if you study it and understand it and just give yourself a weekend and apply yourself, you'll learn it. I've got guys who were clients of mine a year ago, couldn't do it. Now they're doing better wave counts than I am. So that is just complete BS. Plus, the 5-wave move of the Elliott pattern is actually rooted in classic Dow theory. Charles Dow is the grandfather of technical analysis. We should all know him, right? 3 phases of a trend. You've got accumulation, widespread participation, and distribution. I mean, that's just, you know, anybody who's a technical trader should have studied the work of Charles Dow, and that's why we're all here. So here are a couple of the rules. In your first correction, this guy, wave 2, can't go below the beginning of 1. Very simply, we need to retrace, you know, 99% or less, or else you don't have a true uptrend. Pretty simple. Same thing, wave 4 can't go below the beginning of this breakout wave, wave 3. And finally, wave 3 is one of your 3 trend waves, 1, 3, and 5. It just can't be the shortest. That's it. Those are the 3 rules of an Elliott pattern. And what you want to do is just simply print this screen out, tape it next to your monitor, and when you're studying 5-wave moves, just go through those rules until you got it. So here it is again quickly. Number 1, wave 2 can't go more than 100% of wave 1. You've got to do something of a retracement. Number 2, wave 4 shouldn't really go into the area of wave 2, and it can't go below this wave 2. Absolutely can't. And then the final rule is your middle trend wave can never be the shortest. Usually it's the longest, but it can't be the shortest. Okay, so let's go to work. These are a couple charts that are hot off the press, a couple scans that I did in the software we use. McDonald's, 5-wave move. You got wave 1 up, wave 2 down, wave 3 up, wave 4 down, wave 5. Now, how do you pick these 5-wave patterns out? The simplest way to do it, guys, is 1, identify the trend, and 2, just find the 2 biggest corrections in price and time that you can find in the chart. You have a pretty good correction in here, nice breakout gap up there, that's usually your 3rd wave, and then a good sideways correction in here. Just pick the 2 biggest corrections in a trend, and that's it. Those are your 2nd and 4th waves. Okay, I included the rules down there for you. The other one is BBBY, Bed Bath & Beyond. The stock's been getting rocked. Where are the 2 biggest corrections? Right here and right here. And the other thing I like to use in order to pick out the wave count is you see these purple and blue dots? We'll talk about that. Most of the time, your corrections, which would be 2 and 4, will have blue dots on the beginning and the end of those corrections. Okay, so the combination of just trying to find the biggest corrections, 2 biggest corrections, and finding blue dots at the beginning and end, that's going to help you figure out where your corrections start and stop. Okay, Sam says, can you explain the rule 2 more? You mean for 2nd wave or the 2nd one? Wave 4, so this correction in wave 4 can't go below right here. That's it. Okay, that's it. You can't move below this low. All it is, guys, is just think of it. Like this correction shouldn't be in the area of this correction, or else you don't have a good uptrend. The corrections just need to be removed from each other. That's it. Okay, so here's another one, Facebook. I do think Facebook's going to continue higher. We have a wave 5 move to go. Yep, Michael, exactly. 0 is the starting point. Yep, and you don't need to be looking years back. You know, if you can find a good 5-wave move, you can do these kahuna trades. All right, so let's kind of talk about the swing waves, these blue dots. Oh, and let me go back to Facebook. So you got blue dot, blue dot, blue dot, and then a blue dot there. So it's actually doesn't matter. You can put it here or here, kind of the same thing. This is one of the 4th wave corrections, but that's fine. So you got very clear 5-wave pattern in Facebook. That's why, you know, I think Google has another one to go. Facebook has another one to go. Netflix, I think, has another one to go. You know, we're seeing a pretty consistent one more wave 5 move to go in some of these NASDAQ stocks that have been strong in 2015. All right, so Apple, no, Apple's in trouble. Apple is really getting beat up right now. And actually, I have a trade on an Apple we'll talk about. So let's talk about some of these guys, Jeanette and Hubert are going to yell at me if I get going on questions too much. As much as I love talking to you, I get way off track. I'm very distractible, and I can hear she's going to chime in right now and yell at me. Go ahead, Jeanette.
Todd, this is Jeanette. Todd, come in. Come in, Todd.
Got it. Yes, yes, master.
You only have 1 hour.
I know.
Keep
All right.
it going.
All right. I'm having fun, though. This is Saturday.
Go on, then.
I'd be having a toast, real toast to you traders right now, but I got to drive up to my parents with the family here in about an hour or so.
All right.
All right.
Pull it together.
Let's get into the pink and blue dots, okay? This is how you identify good swing waves, okay? How you really start and stop not only your Elliott, but they're really good for figuring out where to start and stop your Fibonacci analysis, okay? So I'm not going to go into this too much. I'm going to obviously have a nice offer for you at the end. We're going to go into these in a lot more detail. But basically, the pink dots, okay, the swing waves with pink, basically what that means is that high was not exceeded in the 8 bars prior and the 8 bars following. The blue dots are more significant trend changes. This blue dot low wasn't broken in the 13 bars prior and the 13 bars following. Okay, so that's really the basis of how I start and stop my fib and Elliott. Okay, so there's the minor, purple dot, 5 waves, 5 to 8 to the left, 8 to the right. Same thing with the blue, 13 left, 13 right. Okay, we'll cover that in more detail later. So as I said, the dots help you figure out where to start and stop your waves, right? So it's really pretty simple. And again, this is all rooted in classic Charles Dow theory. Dow Jones Industrial Average and Dow Jones Corporation. He told us that markets advance in 3 trending phases: accumulation, widespread participation, and distribution. The late coming investors, who you are not, because you guys are obviously active traders and learning how this game works. Unfortunately, most of the investing retail public gets heavily long the market right about here. And I do think the broader markets are moving into a 5th wave, which is when we'll finally get that retail money in. Okay, so from there, we've got to go to Fib, okay, the tools of Fibonacci. So the analogy I like to use with Fib is, if you're looking at a map, let's say Vegas, and you want to take your wife or husband or boyfriend, girlfriend shopping, you're staying at Bellagio, and you want to go to the Wynn, you're like, all right, how long is this journey going to last? Well, I know how I'm going to get there, but I got to figure out how long it's going to take, and what you need is that little that little scale or key at the bottom left-hand part of the map, and that's going to help you figure out how long the journey should last. The map tells you where to go, which is Elliott wave. This guy tells you how long you can expect this trade or trip to last. So that's what Fib and Elliott wave is to planning a trip. So I'm going to teach you one tool of Fib right now, and this is gonna help us set up the Kahuna trades, which are Fib projections. All right. So these are the ratios we're going to use right here, and projections are used to measure the trend waves by measuring the prior corrective wave. All right. So what we're going to do is, if we're trying to figure out where this top is going to be, you're going to look at the prior trend, compare this. You're going to take a snapshot of this low to this high, multiply it by your Fib, and all the charting packages out there have this tool. Okay, so it's already there ready for you to use. So you take that distance, you multiply it by your Fib, and then you project it up from the end of this correction. Okay, so if this is a $10 move, you're going to project $10 up times all these Fibonacci multiples from the low to give you potential stopping points on the way up. All right, so let me go over this again. The way you do a Fibonacci projection is you need to first identify a completed trend wave and a corrective wave. Okay, can you see how the Elliott wave patterns are starting to come in here? 1, 2. If you're looking for the end of 3, your third wave, here's how you do it. You click the beginning of your trend wave, the end of your trend wave, and then this tool requires you to click 3 times. Click once more down there. So a measured move, a $10 move is going to be right there. 161% or $16 move is going to be up there. So all it is $10 multiplied by your Fib, project it up from here. That's going to give you potential stopping points, and there are the Fib levels. Okay, this is a combination of pattern recognition as well as true leading indicators that tells you where you anticipate a trend to end. So to set up the Kahuna trade, here are 2 steps using just Fibonacci projections, and I'm going to hit you with some heavy stuff. I should be giving you super simple stuff that everybody understands. If I was a good salesman and a good marketer, I'd be giving you super simple stuff, but I don't do that. Like, forget that. I'm giving you the heavy stuff. I'm giving you what I've learned to trade my whole life. I've traded for a hedge fund. I've traded on Wall Street. I continue to trade on my own account. I don't hold back. I give you the good stuff right away. If you're a little bit confused, perfect. That's right where I want you to be, because then you're going to take the time to learn this. So here we go. The first step is you're going to measure the distance in your new trend. Okay, and this market could have come off a significant downtrend and begin to reverse, or we could have, just a pretty deep correction and then we start to move up. Okay, so there's your first trend wave. You're going to take your projection tool, and I'll show you how to do this. I can do it on TOS, on eSignal, on TradeStation, on Motive Wave. I mean, anything you want. You click the beginning of one, the end of one, and then you project up from this corrective low. The usual upside projections for finding the Kahuna trade are between 161% and 261% of wave 1. So if wave 1 was a $10 rally, you're looking for a $16 to $26 rally up to capture the end of this move. That's step 1. Step 2 is you're going to take that same tool, but rather than just measure the distance of wave 1, we're going to do the distances of 1 through 3 and then project it up from 4. Okay, so if this was a $20 move, multiply it by 38 and 61%, project it up from there, and that is going to be your typical wave 5 stopping point. So just to review, step 1, measure wave 1, project it up from 2. Step 2, measure waves 1 through 3, project it up from 4. That's it. That's all you have to do. Okay, so let's do it at McDonald's. I showed you the MCD chart. Okay, step 1, we're going to do distance traveled in wave 1. There's the first big correction, and we're going to project it up from there. Usually we go between the 161 to the 2618. We have the 200% and the 2618 coming in right here at these two levels in McDonald's. That's step 1. Step 2 is we're going to do distances of 1 through 3 up from 4, 38% and 61%. See how those Fibonacci levels cluster? They create an FRZ, which is a fib resistance zone. That's where we're expecting McDonald's to top, right there. And even better yet, I would say there's two zones. There's a zone at 120, and then there's a zone at like 126. So you don't even have to say this is a whole zone. If you want to take counter trend trades, you do so with a very tight stop. I like doing the Kahuna trade because if you're right, we should get a sharp reversal. And if we're wrong, we should just continue higher, and you should be able to make a little bit of money. But I can tell you what's probably not going to happen is it just goes sideways and does nothing. It's either going higher or I think it's going lower. Wayne, you're right. It does it in all time frames. You're exactly right. Okay. Facebook. So we looked at the Facebook trade, right? So I've got waves 1, 2, 3, 4, and I did them a little backwards here. This one I did waves 1 through. I've shown you the second step first. I did this kind of backwards. So we're going to do waves 1 through 3 up from 4. Okay. Total distance right here, which I have, is $38. Multiply it by 38, 61, and you can put 100 in there. That's another $38 move. Project it up from 4. So there's your first step. 38 to 618 is your common stopping points. And then you're going to do waves 1, just wave 1 up from 2, and then the zone starts to form. Okay, the zone starts to form. And I have kind of a thick zone between, looks like about 116 to 126 in Facebook, and then another one up around 140. Okay, so near term, kind of like the broader market, I think we're going to have one more push, and I can tell you, you can trade this to the long side just up into this zone, but once we get up there, you're going to be looking for a reversal. Okay. Good question there, because if you count 13 to the left, this one is actually a little lower. This doesn't make 13. If this would have a blue dot if this was the lowest bar, and 13 to the left and 13 to the right. Yep. Yeah, absolutely. We trade wave 3s, but we're doing a little counter trend here. If you want to catch the big Kahuna trade, you got to kind of fight price action. Here's another trade, Apple, and we actually have a back ratio on right now in Apple. I do, see Apple getting crushed here in the 30-minute, and this is fresh. This was just captured yesterday. Big old fib support zone here in Apple between 106 and 103. I will be shocked if we pierce through this zone. In fact, I'm trading against this zone, and this is a 5-wave move. 1, 2, 3, 4, 5. Okay, and there's a few more fib calculations in there which I could teach you over a weekend, but the projections are in there. Waves 1 down from 2. And waves 1 through 3 down from 4. That's it. Now, here's one of my favorite trades that is setting up as a Kahuna trade. And in fact, my buddy Andrew Keene, who's coming on next, He has this trade. Him and I host CNBC's Trading Nation together. He has this trade. I had the trade on already when he came out with it, so I hope he's listening. I hope he's mad. He's my buddy. But this was interesting, okay? And I just saw this. I just read this morning. GoPro, okay? Huge buyer of the January 40 call options. 27,000 contracts traded, okay? Huge buyer in GoPro. If you take a look at the options chain, 27,000 on the open interest at the Jan 40 call, Jan 2017 40 call. So huge buyer right there, which I always like to know. But guess what, guys? It's setting up as a 5-wave kahuna trade. We've got a bunch of fib support down there. I have the trade on. I've got a couple. I've got a 20-25 call spread on. I've got a 25-35 call spread on. And in fact, I'm going to be looking to set up this trade with clients Monday. Here's how I'm going to look to structure it. Okay, this is the P&L. This is the risk graph for basically what it's called is a bear call ladder, but Big Kahuna trade sounds much better and it goes with the surfing theme, right? So what we're going to look to do is sell the 17 calls, buy the 22s, buy the 24s, okay? We get hurt if GoPro stays around $24, okay? I don't think there's a great chance of that happening. I think it's either going to go down to 15 or 10. At that point, we'll make a little bit of money. Or if this thing does get bought out, which I believe it will, you know, the acquisition price should be well above 29, and that we have that uncovered call at 24, which would take us up into another GMCR. So that's a big kahuna trade in the works. So you've got your money's worth right there. So guys, the GMCR, you know, I just taught you Elliott wave. I just taught you Fibonacci projections. You spend an hour with Elliott, you realize in a fourth wave you often get triangles, which are just simple consolidation patterns. That's a triangle in wave 4. Guys, you had every reason to try to be buying GMCR against that zone, and we did. We got a little bit lucky. We crushed the trade, but that's a setup that you can replicate with the information I've just given you. Okay, so as I said, GMCR, GoPro, big kahuna trades, it's a bear call ladder. From an Elliott wave point of view, this option strategy is excellent. It's obviously for very volatile stocks. You know, guys are buyout candidates, heavily crowded trades within a trend. Crowded trades in a trend tend to reverse sharply or continue in that trend. They don't usually go sideways. Biotech announcements or earnings plays. Okay, so again, here's what you just learned. All right, let's play our video. We got to have our little animations to go along here. Okay, actually, this was awesome. This is the world record right here. Garrett McNamara, I can't even pronounce it, in Portugal. He rode a 100+ foot wave. Isn't that insane? And he did it with a GoPro too. Look at that. Unbelievable. So using Elliott, fib, and options, you can make counter trend trades despite what you've learned, right? Even if you're dead wrong using this strategy, you can still make money. Okay? So from there, you still make money, right? I would say counter trend trading is about 20% of my trades, right? The other 80% absolutely should be trend trades, and we have much more controlled, not such big movements required. You know, we love trading options around Elliott and fib, especially in fib price and fib time to help pick out expirations. The two go wonderfully together. So I think it's all about planning the trade, right? Anticipation equals performance, right? Tony Robbins, love him, hate him. I think he's great, but I love the quote, anticipation is the ultimate power. If you react to the markets, guys, you're going to get beat up. If you anticipate, you can be successful. And like I said, all I've ever done is trade. Since I opened my first E-Trade account when I was like 19. I traded through college. My first job out of college was a proprietary trader when I was 22. I traded for a CTA. I traded for a hedge fund. I went to Wall Street. I dropped out of Wall Street. I'd much rather work for myself. I've been through trading all of my career, and I've seen everything out there. I keep coming back to styles of analysis that are fixed levels, meaning pattern recognition such as Elliott, but then when you add Fibonacci on top of it, you come up with these zones where you expect the market to respond. If it responds, you get a trade, great. You are truly anticipating the reversal. If it goes through your zone, fine. I get stopped out. I was wrong. I take a tight stop and I just move on. That's it. So that's truly what I mean by anticipating or trading with a plan, then planning your trade. Yes, Michael. How much did you make this year? I'm not going to say how much I made, but yes, I had a very good year. In my main trading account, I had a return that many hedge funds would kill for. I'll tell you that. It could be different next year. I know that, but I had a good year. So here's the offer if you guys want to continue on. That's just one setup. Okay, we do have a course coming up. We're going to do this the first week of January. This is going to be catching the big options trades, how wave surfing can land you the big one, and how to ride the bathtub waves too, right? So, we hit a lot of singles and doubles using Elliott and Fib. And we're obviously going to cover that, but we're also going to show you how to catch some of those big trades. I'm going to show you the best trend trade, counter trend option strategies. You can finally become a surfing guru and understand the wave principle. Learn Fibonacci as the GPS in your trading. Figure out how long your trip is going to take. If you plan your trip accordingly or plan your trade, it's going to help you with position sizing. It's going to help you with your temperament. Meaning you're going to stop taking profits so soon or holding on to losers too long. It gives you a framework or a context in which your trade exists, which is huge. Okay, I mean, I remember I started day trading, right? And we would be in and out scalping big listed NYSE stocks against the S&P futures, and I just got tired of coming out of work making 100 trades a day and just feel like I got in a boxing match with Mike Tyson. So I'm like, I'd love to hold on to positions. So I remember just putting on 50 shares of at that point, I think they were quadruple Qs. I think they were the QQQQ. And I remember how painful it was to sit in the trade for 2 hours because I just felt so lost. I didn't have a framework or context. So once I discovered Elliott, back in 2002 or 2003, I finally had a framework in which my trade was expected to exist. And once the market pulled back and I was expecting it, it didn't, like Mark Douglas would say, you don't treat that incoming information as harmful. You expect it. So you can sit through a pullback and then the next trend so you can make more money. So that's what it's done for me. It's helped my trading tremendously, and it got me out of the very short-term time frames up to swing trading where I can put trades on for weeks and not even care about it. Okay, I'm going to keep going, and I'm going to hit those questions. I got some time. I believe I'm doing okay. I'm going to hit those questions. Yep, I'm doing okay. All right, so who's this for? If you want to kind of comfortably navigate the choppy waters ahead, this market is getting volatile, and I'll tell you what, guys, it's going to get more volatile. On a side note, if you talk to anyone who says technicals don't work in volatile markets, you need to walk away. Laugh first and then walk away. Technicals work when markets get emotional. Emotional markets are volatile markets. Technicals work wonderfully when the market is being driven by collective emotion, okay, and that is volatility. So I expect these patterns to continue to work better and better as volatility gets higher and higher. It's those slow chop markets, S&P 6-point range, 8-point range a day, low volatility is when markets tend to wander through technicals. When volume's there, emotion's high, that's when the stuff works. So this is for guys who want to kind of enhance their option trading by improving their chart-based trading skills. Options are meant to enhance your trading. Okay, options are not meant, in my opinion, to hide from the charts. You've got to embrace them. You've got to be good at the charts. You've got to be good at recognizing what's going on in the underlying market. This is not the Holy Grail. We're dealing only in probabilities, not certainties. This is for people who can follow a simple set of rules, and if you don't mind doing the work, you gotta love putting the time into the charts. You gotta love it. Some of my, I hope my wife can't hear me upstairs, but some of my most precious time is coming in, putting my Bose headphones, which are right here in my right hand, on my head, listening to great music, trying to find out the underlying structure in the market, and just forget everything else that people are talking about When it's just you and the chart, completely unbiased opinion, it's a wonderful thing. And you can pick out some reversals that people don't see. So this is not for people who think it's the Holy Grail, who like to trade for your entertainment. I'm not going to have you on your yacht with the Wolf of Wall Street by March, and this is not for people who can't make a decision. This is 100% money back guarantee. We always do that. I've been working with the team here at Trade Thirsty for a year. My return rate is very low. I'm very happy proud of the products we put out there. So if you guys want to get involved, this is the link you're going to follow. Now here's what you get. You're going to go to tradinganalysis.com/toast. Toast to you traders. TOAST. That is my website. So just go in the browser and type in tradinganalysis.com/toast, and I believe they'll put the link in there for you. Here's what you get. We're going to do a live content presentation. It's going to be 3 hours. It's going to be January 6th. I'll give you the dates. We are then going to do 3 live trading sessions at 90 minutes each. So we're going to do 270 minutes of live trading. I'm going to be trading my real capital like I always do, taking your questions, going back and forth, reinforcing the concepts that we learned here in the 3-hour course. I didn't get to talk about it, but I have a Fibonacci calculator built, ready for you to download so you can put in those projections. If you don't have software, which would be surprising because every software has it, but if you just want to do it quick, I have the calculator built for you. I'll give you the option strategy selection technique. I'm going to take you through a part that I think is pretty competitive, the art of the trade. It's how we handle risk on each trade. We have a downloadable calculator to figure out the risk on each options trade or stock trade. That's the par positioning tool, percent of account at risk. And you get the purple and blue dots, the swing wave indicators. We haven't started selling those yet. So all together, guys, just shy of $1,000 value, and our toast to you for $97 only through the weekend for $97 Monday. We are going to start hitting the circuits with this. It's going to $297. This is the first time I've done the presentation, so we're going to kick it off at $97, but this is going to $297. Guarantee you on that. So take advantage. Tradinganalysis.com/toast if you like. Here are the dates. We're going to do this live on January 6th, 8 p.m. It's going to go to 11, so it will be recorded and archived. We'll have it up the next day, 48 hours at the latest. It'll be up. We're going to do live trading 10 a.m. right when the market gets good on Jan 13th, 20th, 27th, 10 a.m. Everything going to be recorded and archived. Okay. What's the swing wave calculator? Pete, it is something that you just simply plug in the wave 1 low, wave 1 high, and the wave 2 low. I'll show you it, and it tells you your upside fib projections. Yep. Chris says, hi Todd, I attended this class you had in October, November, really enjoyed it. Can I attend this again? Yeah, absolutely. This is completely new content, Chris. So if you enjoyed the last one, I guarantee you're going to enjoy this one, but I don't need to guarantee you because we already have. It's 100% money back guarantee for less than $100. Okay. So yeah, let me just take some questions and we can jump into some live charts. So that's how you get it. Tradinganalysis.com/toast. Very proud of this course. Let me just read the questions here. Yeah, Wayne, I do futures, but like I said, I try to get away from day trading. I do scalp, and I was actually trading a lot of futures in the short side Friday, yesterday. So I do, but most of the work I try to do, and most of my research customers are working professionals, and we trade 2-3 times a day in the options market. But yeah, hey, how are the twins doing? They're good, Chris. They're driving us nuts. We love them, but oh my God. Tiger says we give those indicators for Elliott waves. I enrolled November 7th, waiting for the dates presentation. Are the dates the same? Tiger, I'm not following you there, man. Let me know. Not following you there. Will you give those indicators for Elliott waves? 2. I enrolled November 27th, but still waiting for dates and presentation. Tiger, email into info@tradinganalysis. I'm not following that one. Email in if you don't mind. 97 until Sunday, Mihal. Yup. You did not mention any instruction on Elliott Wave, and of course, only Fib. No, it is absolutely Elliott Wave and Fib. It's a combination of the two. Calculator work on, this is a standalone, the calculator is not a plug-in to charts, it's a standalone download. Yep. Michael, yes. If you're gone in Jan, yeah, this is all going to be archived. You're going to be given access to a home page, a secure link where you log in and view all the content. So it's yours to keep forever. You don't need to buy any software. Yes, we have it for Ninja Wayne, the indicator. Do we need to be proficient in options, Corey? No. No, you do not need to be proficient in options. Yes, these sessions are recorded. No, Alan, do we take PayPal? Do we take PayPal? Do we take PayPal? No. I'm sorry. Will this work on indexes too? Absolutely. How do you decide which option contract to use and how far out to go? John, based on Fib, price, and time, as well as Elliott. Edward says, thanks, Todd. Great direction as always. Thanks, Edward. Appreciate that. Wendy says, hi, Todd. Is a present workshop same as the one you conducted a few months ago? No, this is much different. Brand new one. I've been working hard on this. Indicator work with TradeStation? Yes. Does it work with TOS? Yes. Does it work on a Mac? Yes. Bill, I purchased the option course. Is this substantially different or overlap? This is brand new, Bill. We're doing more advanced option strategies now. We are going to start at the basics, but this is different. Yep. Yes, this is, it'll be live just like we're doing now, John. I take all questions throughout presentation. I don't have a credit card. All right. Send us a check, I guess. You could just send us an IOU. That's fine. This is a one-time training session, but we're doing the live trading for 3 weeks after. Software for the swing wave indicator is TOS, TradeStation, eSignal, Ninja, Sierra, Motive Wave. I'm bringing other ones. I'm trying to keep up with the questions as fast as I can. No, I lost them. I'm going to go back. Interactive brokers, there's no plug-in to interactive broker structure. You can't program to that, so nothing to do. TC2000, yes. Telechart, I think. No, we don't have it built for TC2000. Todd, I'm in. No day trading margin call this time. Kevin, hey, yeah, that's awesome. Okay, any specials for your weekly trade calls? Nah, I'm just including that in our basic subscription. Fidelity is not something where you can program in. The only thing you're going to need a special software for is the swing wave indicator. Everything else works on any platform you're using. The swing wave indicator is a custom kind of indicator that only applies to certain charting packages that have the ability to write custom code, if that makes sense. Okay. Okay. Perfect. Is this the best course to really learn Elliott and Fib? Yeah. I mean, or do you have another course that goes more in depth? No, I will be doing a very comprehensive Elliott Wave program at some point in 2016. It'll be a lot more than this, but this is a nice primer for 97 bucks. I can promise you it's going to be a lot more than this. Yes, yep, you'll take away some good indicator or some good trading strategies for 97. It's a good value. Options House is not programmable, meaning you can't write to their API, so the swing wave indicator won't work there. But if you don't have one of this is not the swing wave indicator is not the whole foundation for the course, right? If you don't have a special charting package, you still will derive a lot of value. So don't get hung up on that. Okay, I will teach you. It's more about focusing on Fib and Elliott. So don't get tripped up if you don't have one of the more premium charting packages. You'll still get value. Can you extend the price to the end of the year? No, we're going to $297. I think Sunday or Monday or whatever. Okay. I bought these. I bought your modules for Fib and Elliott. Can I get this for free? Nope. Sorry. This is next level stuff. Especially for only $97. Do existing members have access to the swing wave indicator? Yes, you do, Paul. Yes, you do. I'm becoming a big fan. In late November, purchase your precision timing options course, which included the swing wave. Is there any way I can receive something else in its place if I purchase this? So, you want to return? He goes, I'm becoming a big fan of yours. Great. Thanks, Jeff. I don't understand. Do you want to return the options and get this? I mean, I guess, whatever you want. These are great questions. You guys are funny. Yeah. Okay, got it. Yes, it works in Thinkorswim. I actually have it right now in TOS right here. So here's TOS with the swing wave indicator in there now. Yep. So there's the purple and blue dots in GoPro and stuff like that. Yep. Chasa Ninja. Yep. Okay. Oh, so I know I'm right up against the time, and I know Keenster's coming on next, so I really wanted to go through those charts. But as I said, I'm sure you guys could even go back and find the setup. So again, it's GoPro, which we talked about. It's CMG, which is Chipotle, which is getting wrecked on the problems obviously they're having with the E. coli. And then gold is also setting up. So I'm going to be looking to do that. So gold, I'm going to be looking to put this trade on. I'm actually also going to be looking to buy physical because we are moving into a wave 5 low. Yep. Larry, Mr. Larry, somebody bought those 27,000 calls, those 40 calls. Somebody bought them. I think it was like a $7 million purchase in premium, $7 million options trade. So, I mean, it's massive. We are in the presence of greatness here with Larry Pesavento. Fibonacci Godfather. So, all right, that's awesome. So, guys, I hope you're getting bored. Hope you picked up something. Did I change anyone's mind about Elliott, or did I kind of show you it's not as difficult as we think? What do you guys think? Do you still think it's voodoo, or is there hope here? Tell me what you're thinking. 30-minute sessions. Let me go back. Really like your videos and teaching. Thanks, Tiger. I have fun with them. The dates. Oh, let me go back. Best explanation I've ever heard to date. Thanks, Efren. I appreciate that. I'm in. Gave me a fresh perspective on Elliott Wave. That's awesome. I'm sold. Great. Awesome. Awesome. I'm convincing. No, I'm not. I just have a lot of fun with it. My dad always told me, do something you love in life for your profession, and I've worked really hard to find something I love and something that provides for my family, and it's great. I'm very blessed to be doing this. I'm very appreciative of doing this kind of stuff, working with great people. If I can help new traders out, life's good. So that's why we're all here. So thanks, everyone. These are the dates right there. 6th is the content. We're going to hit that hard Wednesday night, and then we're going to trade live the 13th, 20th, 27th. All right? So thanks so much to Trade Thirsty, and thanks to everyone, Rob and Price, great presentations. Then you got a good one coming up with my buddy Andrew Keene, who we work together at CNBC's Trading Nation. We co-host, and we kind of cut it up and go after each other and insult each other as much as we can. It's pretty fun. So Keene will take good care of you. All right, guys, if you want to hit the course, tradinganalysis.com/toast. Have a great one, guys. Thanks so much.
All right, thanks, Todd. Let me go ahead and remove Todd's status and put my status back in place. Y'all give me some feedback. How you feeling about today so far? Have you learned some good stuff? We always love to hear what you think was good and what you think was not so good, and just as honest as you can be is the best policy, because for us it helps us plan on who our